Money FM 89.3. Best of breakfast. The bigger picture, only on Money FM 89.3.
Good morning. Welcome to The Bigger Picture. Me, Ryan Huang. Now, for years, Europe has been synonymous with slow growth, fiscal austerity, and an over-reliance on monetary policy to keep its economic engine running. But a major shift is now underway. Germany, long the poster child of fiscal discipline, is cracking open the purse strings, and the ripple effects could be huge. One that could pave the way for Europe's economy and markets to find their mojo again. And that has actually prompted some folks to ask if it is time to make Europe great again, and that could be the new MAGA. And to help us talk about what's happening in Europe, we have Taimur Baig. He is the chief economist for DBS. Taimur, good morning. How's your Friday going?
Good morning, Ryan. You made me smile with your MAGA reference.
Yeah, MAGA could be the new MAGA. Now, first of all, help us understand what's going on in Germany. Its new approach towards spending coming against the backdrop of geopolitics and trade tensions. Is it any surprise for them to go down this path?
Right. I would just like to step back for 1 second before I talk about the conjuncture, which is that the narrative that Europe has been in this slow growth morass and its outlook remains dire, I think needs some degree of contextualization. Europe, despite all its problems with immigration, rise of the far right, and monetary policy over-reliance, remains a hotbed of very critical technologies in the world. Without ASML, you can't have a 2-nanometer chip, and ASML feeds on technologies from Siemens and BASF and Carl Zeiss. The GLP-1 drug movement began with Novo Nordisk, another European company. So Europe remains a continent characterized by high quality of living, high life expectancy, high quality of education, and consequential and important research and development. It has its problems, which has now come to the fore, both with the Russian invasion of Ukraine, as well as U.S.'s sort of loss of reliability as an ally and partner, and hence more things need to be done. But I would like to hasten our conversation with underscoring the point that Europe is not starting from ground zero. It has some core strengths in any case.
Perhaps it is overlooked to some extent when you consider the sexier names we see out of the U.S., like NVIDIA and so on. So looking at what we have on the table right now, are we now seeing a bit of attention coming back into Europe, at least to a greater degree, with how valuations have been playing out in the U.S. when it comes to some of the Mag 7? Have we reached an inflection point where Europe is now going to, I suppose, bounce back?
Economically, bouncing back requires many things to go right, but the financial markets are very forward-looking, and they've certainly taken the cue and run with defense stocks of Europe and perhaps even ancillary manufacturing companies, which may actually benefit from some of these trade wars and localization movements. So yes, the defense spending is real. Europe will rack up substantial defense spending bills and will have special bond issuances under the aegis of the European Union in the coming months and years. Germany, certainly, as you alluded to, will loosen its fiscal purse strings. There are issues related to the Greens, for example, in Germany, what they think with respect to some of the infrastructure investment and how responsible that will be. But I think Chancellor Merz can't handle those things, and he's been busy, his coalition between the SPD and the Greens, to make all of this work. So these are historic, consequential moments, no question about it. And Europe going on a spending spree to take care of its own has been going on in terms of dealing with Southern European crisis, but now it's more broad-based, and it certainly is something that the markets have taken notice and are quite favorable in terms of finding deep value stocks in Europe and going along with them.
Yeah, Taimur, do you expect this to pick up in terms of pace when you consider how there's all this talk about the U.S. potentially reducing its commitment to NATO, and you've got the tariff wars going on as well?
The investment thesis over the past decade has been related to what we call U.S. exceptionalism. If you did not invest in U.S. stocks, if you were not long U.S. dollar, you would have missed out because the rest of the world was doing very ordinarily compared to the U.S. We might be at a point when that narrative is turned upside down, where the U.S., through design, have chosen to create a lot of disruption in the domestic economy. Trump basically wants to reorder the U.S. economy in a radical manner, and there'll be a lot of frictional cost to that with no clear end in sight. At a time like that, investors would want to find bastions of greater stability. Europe certainly offers that. They would also try to find value, and given the valuation in the U.S., despite the recent sell-off, is sky high, whereas in Europe, despite the recent rally, it is still extremely low. I think it's a no-brainer for global portfolio managers to take a very serious look at European stocks at the expense of U.S. stocks.
Yeah, definitely a lot to look at. And then, of course, on the table as well as what is the impact of those tariffs on both economies and companies. Taimur, how much is this going to affect global economies? Because for the U.S., there's now growing odds of a recession, or some might call it Trumpcession.
Unfortunately, Ryan, trade wars have no winners. It's going to be painful and problematic for the whole world economy. In this particular instance, U.S. might be the biggest loser in the entire dynamic because it had a very good thing going on in the last 3 years, growing at close to 3%, the labor market being very strong. And now with this simultaneous assault both on federal government as well as on the whole trade and tariff issue, there are a lot of self-inflicted wounds that are sort of hurting the U.S. It is a source of the largest amount of consumer demand in the world, and hence for export-oriented economies, a slowdown in the U.S. certainly offers a downside. But the U.S. is not everything. It is important, but even for Asia, 80% of its trade happens with the rest of the world, not just the U.S. Mm-hmm. So regardless of where the U.S. economy goes, the fact that there is fiscal purses being loosened in Europe, and not to mention also in China, I think there'll be pockets of demand offset at a time when the U.S. slows. So I'm worried about the global economy on the margin, but I think that the world has a few things going in favor to offset some of the downside coming from the U.S.
Yeah, there are a couple of moving parts here, Taimur. So when you talk about trade wars and all the implications, you will be seeing some companies diversifying, looking at new supply chain routes and so on. How will this play out for our part of the world, where maybe we might see more folks looking into the region, maybe Singapore as well? Because when we had the China Plus One narrative, we did see a bit of beneficiaries in Southeast Asia.
I think it's more than a bit. The region, frankly speaking, is going through a golden age of investment spurt right now. Singapore in the last 3 years, each year has received net FDI of more than $100 billion. Malaysia, which used to get very little FDI in the last part of the last decade, now is going through a major spurt, receiving $25-30 billion a year. So it has never been this good for the region's tech ecosystem, energy development, consumer goods, industrial goods, electronics, everywhere, lots of money coming in. Perhaps some of the motivation is related to China Plus One, but let's also not discount the region's core strengths. Tremendously flexible and resilient supply chain, world-class logistics, good quality human capital. This is what European investors, Americans, Japanese, Koreans, and the Chinese find very, very compelling. So regardless of all the noise around trade, I think the region remains one of the best destinations for manufacturing FDI. That will remain the case. And Trump is sort of doing the rest of the world favor. The noise of trade coming from the U.S. is bringing the rest of the world close to each other. We're seeing India, traditionally not particularly predisposed toward trade, now signing trade deals with the Brits, the Europeans. Southeast Asia and South Asia, under the aegis of India and ASEAN countries, are coming together. This is all going to be good. Some of the negatives sometimes are the seeds for some positives.
Okay, I think this is where we can zoom in on Singapore when you look at some of the bright spots and maybe the weaker areas going forward. So what is the sentiment right now on the ground? How optimistic are businesses when it comes to the outlook? What are we looking at when it comes to spending sentiment, budgets, and so on?
Ryan, we ended 2024 with a massive spring in Singapore steps. Almost 4.5% growth for one of the richest countries in the world. That's an extraordinarily high growth rate. Normally, wealthier countries tend to grow lower and poorer countries go faster. Singapore had a stellar 2024 on the back of some of the investment story that I was relating earlier. Singapore, I think, has a pretty strong game plan. It's an election year. The budget is very much pro-growth and pro-consumers. We have the momentum of investment from last year likely to become dented by the trade war. Mm-hmm. Now, if the U.S. Department of Commerce does various investigations against Southeast Asian countries and Singapore falls in the crosshairs, that certainly does not help. But I think those are short-term noise, whereas the longer-term investment dynamic is extremely compelling for Singapore. I meet with global companies all the time, Ryan. Not one of them expressed a reservation about investing in Singapore. They're actually doubling up on their plans.
All right. So optimistic picture ahead. And of course, a great snapshot of what's happening around the world with Taimur Baig. He is the chief economist for DBS. Taimur, thanks so much for your time this morning and have a great weekend in advance.
You too. Always a pleasure.
All right. Catch up again soon. Stay Money FM 89.3.
Before acting on the information on Money FM, please consider if it's suitable for your own investment objectives, financial situation, and risk tolerance. To listen to more great interviews, download our podcasts at audio.sg or download the audio app. That's AWEDIO, audio at the App Store and Google Play.